when things slow down like our market is right now, everybody tries to find a way to make more money. Now, I think most of us would like to think that we really look towards legal channels, but when some of us can find an honest income or an avenue for that, we might, let's just say, bend some of the rules, right? And then there's another group of people who just like to do illegal things. You know, when things get slow, they also need to find other outlets for income too.
I liked it. I was good at it.
Or to up their game in whatever nefarious activity that they're working in. Case in point, mortgage payoff fraud is up 532%. So as a realtor or lender, what's your excuse for not bringing your A game to this, right? Payoff fraud, by the way, is exactly what you think it is. Escrow orders pay off, fraudsters jump in and wire instructions to escrow, they pay off the loan, but instead of going where it's supposed to go, oops, that money lands somewhere in Mogadishu, never to be recovered or seen again. Now, according to Certified CEO Tyler Adams, he says the firm caught $1.9 million in attempted mortgage payoff fraud in the first quarter of 2023. By the second quarter of that year, the number rose to 532% to $12 million. Now, he goes on to say, always be wary of last-minute changes or updates to wiring instructions. If you end up with two payoff statements and you can't tell which one is right, make sure to call the lender first, no matter how long you need to wait on the phone to get verified. Isn't that sweet? Really? This makes me want to get into wire fraud. How can this be all that stands between you and your $450,000 mortgage payoff? If you have more than one source that wants the payoff money, it's better not to play pin the tail on the donkey approach without wire. I kind of thought this was common sense. Now, you know what makes this extra interesting? Wire fraud is up when overall transactions are at or near their lowest level ever, making this fraud even more fantastically unbelievable that it works at all in the first place. So, lenders and realtors, talk with your escrow agents before that wire goes out, because I mean, I'm telling you, this mess is hard to clean up, and I don't care if you don't have your hands in it. If it's one of your transactions, yikes, referral season is over.
It's over. It's over.
The CFPB, get this. Examiners found that certain institutions used compensation plans that allow originators to receive different levels of compensation for brokered out versus in-house loans in violation of the loan originator compensation rule. Additionally, the CFPB found that their Tiller Regulation Z violations, where loan agreements required that a variable interest rate be rounded up or down in certain circumstances, but where the lender's loan origination system did not properly round these figures, resulting in interest rates difference from those stated on the loan's promissory note. It's interesting because this is the front runner for the future of all mortgage models, all mortgage shops. Not terribly new, but certainly with a new spin to it, isn't it? The fastest growing model out there right now is the hybrid broker correspondent mortgage company approach. Pretty clear, guys. You can't cut your loan officers a break with their compensation if you're going to bank that loan. The CFPB sees what we're doing right now, and they've told us as much, but most importantly, they've now got all of us on notice for future enforcement actions. You see, the bigger picture is this. The CFPB is taking keener notice of mortgage brokerages and their growing dominance in the overall origination space. As a result, you can expect to see more audits and probably more enforcement actions from said agency. Now, if we look at history as a precedent, we know that the CFPB doesn't get out of bed for anything short of 7 to 8-figure enforcement actions. It leads me to believe that if this is in fact the road that the CFPB is going to take, they'll be looking to make a big splash. And you know, the thinking in the mortgage space is it's never going to be me, it's never going to be me, which is exactly what Angelo Mozilla thought, and look what happened to that sorry bastard who just died. Do you realize that Countrywide had loans called Friends of Angelo? That he was giving loans to the House Financial Services Committee and the head of the Senate Banking Committee, along with the heads of Fannie and Freddie and everybody. They were all his buddies, and they threw him to the curb. Finally, did you know that 10% of all homes, nearly 10% of all homes on sale right now are going for over $1 million? Now, in spite of this, and as you can see from the red on the far right side of this graph, property values are collectively down for the first time, ever? Seems that way, doesn't it? This suggests that the Fed's actions might be working. And lastly, Fannie Mae has scrapped their title insurance waiver program. Woo! Bet you didn't even know they had one to begin with to scrap. Why? Well, because it was just a stupid idea and totally unsurprising to us. My question is what is Fannie Mae or Freddie Mac's next wonderful idea going to be? Stay tuned, we'll let you guys know. Hope this is a great day for you and happy selling. Later, skaters. AI in the mortgage market, Carl White, the Marketing Animals, they have a download for you that's going to help you really navigate these waters that are going to become an ever-increasing part of what we do on a regular basis. Hopefully, AI just doesn't start writing loans, but we'll see.